Welcome to this also presentation that I prepared for you guys. In this video, we're going to talk about two things, credit and personal finance, as they are very much intertwined. But before we go over the basic fundamentals of personal finance and credit, I want to make sure that you formally know who I am. I'm Andre. I'm the CEO of Pinnacle Credit Repair. We have been doing business for 12 years, helping people repair their credit and actually manage their credit. I've actually even been featured several times on one of the biggest credit building and financial websites, badcredit.org. If you need credit repair, whether you want to remove late payments, charge-offs, collections, child support, bankruptcies, I'm the guy to do it. You can hire me personally, or if you're on a budget and you still want the best rapid credit repair service using artificial intelligence, try my Fast Track Elite program, which is $299 to enroll and $99 a month. What we'll do for you is offer you a customized credit repair blueprint to start tackling all those negative accounts that I just mentioned. But if you want rapid service and more one-on-one time with me, you can book a consultation with me and hire me personally. I was also mentored by one of the greatest attorneys around, Austin William Cooper. He was the attorney for John F. Kennedy. You know, the president that was assassinated.
Kennedy was shot and killed in Dallas, Texas by Lee Harvey Oswald. There were no new revelations in the documents, but they included some details on correspondence between Oswald and the Soviet embassy in the weeks before the assassination.
So I've been around some of the best people in credit building and finance. So I want to share with you some of the things that I apply for my clients. Did you know that 34% of Americans have absolutely no savings? And less than 69% of Americans have less than $1,000. So what I'm about to share with you today in this video is nothing groundbreaking, maybe a reminder for some of you guys, but once you know what I'm going to explain in this video, you'll be amongst the top 5% of American citizens. How about that? If you haven't already, go ahead and subscribe, hit the subscribe button and like. That's if you're on YouTube, wherever you're watching this. This video may be posted in random places, but for the sake of YouTube, go ahead and subscribe to my YouTube channel, which is Andre Nguyen, and hit that bell notification for any alerts for all of my content that will be pertaining to personal credit, finance, and other things on my channel. Let's talk about another statistic. Did you know only 23% of Americans have great credit? Great credit meaning 800 or above. Do you want to have great credit? In this video, I'm going to show you how to do that. I want you guys to read this quote aloud with me. The road to perfect credit is paved by personal finance. So that means if you want perfect credit or great credit above or 800 or above, you need to master personal finance. But what is personal finance? Personal finance is essentially money management. You might make $45,000 a year, which is the national poverty level of America, I believe. In the future, you may make more. Hopefully, I hope you make more, as much as $100,000 or $150,000. Then you're reaching up to the top 20% of income earners in America. And then anything above 300 is you're in the 10% category, 15 to 10% category. An increase in income, but it doesn't matter how much your income increases. Remember, an increasing income may dig yourself a bigger hole if you have not mastered money management. Now, in my early 20s, that's when I made the most money of my career, and I've made the biggest mistakes in finance. So trust me, I know what it's like to increase my income, but I never learned this stuff. I learned it the hard way, but no one ever told me this until much later. Going years and years of making the same mistakes. Finally, in my late 20s, I was able to master my finances. Consider the information I'm going to share with you and consider these strategies, because these strategies are known by the top people in finance, financial advisors, wealth management, estate planners, insurance personnel, CEOs, finance lawyers, corporate lawyers. They all know this stuff that I'm about to share with you. In order to master personal finance and manage your money properly, you need to know this basic question. What can I afford? Ask yourself, what can I afford? What can you afford? Do you know what you can afford? Go ahead and ask yourself. If you have no idea, then that's a problem. Maybe you think you can afford something, but in the eyes of masters of personal finance, I'm talking about people that have millions, they're looking at you and be like, actually, you don't. Let's talk about that. Formal budgeting. Here we have 1 month, 3 months, and 6 months. You need 6 months of all your expenses already saved up, meaning your rent, your medical, your Medicare, your healthcare, your insurance, your food, your electric bill, your phone bill, your car note, your mortgage. You need 6 months of that saved up to be in the top 5% of Americans. If you have not reached that level yet, you need to do it. You need to do it. Why? Because this paves the way for your financial future in order to have excellent credit, because credit is accumulating debt, but there's good debt and bad debt. And so before you either hire me to fix your credit or someone else, or fix it somehow, apply for credit cards, you'll be digging yourself a bigger hole if you don't know how to manage your income or manage your credit. You need 6 months of savings saved up before I recommend starting into the credit game, or starting even in a business sense, opening up a business or start leveraging your credit to do business. That is very important. So if you haven't already mastered the basics of finance, which is 6% savings saved up, if you can't do 6, then do 3. 3 is pretty good, but 6 is like the best. And if you could do above 6, that's even better for you. Way to go. But try to aim for 3 to 6 months. 1 month of saving, that's nothing. So I don't even want to talk about that. 3 to 6 months of all your rent, your mortgage, your car note, your phone bill, everything saved up in an emergency fund. Then the additional money that you have can go to start investing. You want to invest about 10, 15, about 20% of your income into your investments, such as a business, index funds, etc. That way you have some money to play with and some money for your personal and for savings. Focus on this basic. Again, guys, this video is going to be very basic, but you need to commit to basics before you can do anything advanced. A lot of people are really anxious to move forward, but don't take 5 steps forward in finance and then fall back 10 to 20 steps. That's a disaster. Prevent bad things from happening to your finance by preparing properly. So assume you've been able to pay off 6 months of your expenses, you have it saved up. What about your credit? You need to increase your available credit limit. Your whole idea of credit needs to change. Most people view credit cards as an emergency fund to pay for an emergency, but that's absolutely wrong. Your mind, your viewpoint, your opinion, your belief about credit needs to view it as only a tool for you to build wealth. Now there's personal credit and then there's business credit, which we'll go in later. But in order to build wealth, you need business credit, but you can't get business credit if you don't already have personal credit. So let's talk about what are some strategies, what are the basic principles in order to build good credit. You need credit cards. But before we go over the specific credit cards, because you need a credit card strategy, because there are bottom tier and top tier credit cards. A lot of people apply for the top tier credit cards thinking they're going to apply because they think they have good credit or great credit, but in actuality they don't, because there's micro prerequisites to these specific credit cards. But again, we'll go into those later. Let's focus on this part of the board. Credit habits. You need to instill good credit habits. And if you've managed to pay 6 months, if you've managed to save up 6 months of your expenses, I could imagine you have the fortitude to start treating credit the proper way, managing your credit cards instead of just, maxing them out. Your credit cards need to have a low utilization, which is below 35%. 9% is ideal, but 35% is okay. If you can't do 9%, try 35, try 25. But 9% is like the top elite level people. And you need to know a healthy payment schedule. So your available credit limit, you cannot exceed 9 or 35% at the maximum of your available credit limit. Otherwise, your FICO score is going to go down. And you might max out your card and then just pay it off. But if you don't understand a healthy payment schedule, then what's going to happen is that high balance of you maxing that card off is going to be reported to the credit bureaus. And that's going to lower your score for that month, but it stays there as a stain on your credit for every single month that you do that. On your credit report, it needs to report you have never exceeded 35%, 9 to 35% of your actual credit limit. So how do we do that? Any credit card you have, and shortly after I explain this strategy and this formula, we'll go into the specific credit cards to start building your credit, because that is a maze in itself. And if you don't have a guide like myself to teach you how to do this, you could make severe mistakes that will keep you from getting those cards in the future. So you want to make sure that you watch this video until the end. So I've written a formula here. It's max 27, pay 5 to 7 days before reporting cycle, which basically means anytime you max out your card or exceed the 35%, which is actually good. Now I know that might sound contradictory to what I just said, but it's actually good if you do it in the right timing. So you want to max out your card 27 days before the bill due date. That's when the bill is due. And what this does is this instills and stimulates activity on the card, which shows the credit card company you have borrowing capacity. But when you borrow a lot, you place yourself at a high risk unless you pay it down to 9% 5 to 7 days before the reporting cycle. So I want you guys to understand two factors about your credit cards. There's a billing, there's a due date of the bill, and there's a reporting cycle. So on your billing statement, it will tell you when the bill is due, but on the billing statement, it doesn't tell you when the reporting cycle is. So what you have to do, take your credit card out, call the number on the back, and ask the credit card company, when is the reporting cycle to the credit bureaus? When do they report the balance to the credit bureaus? You want to write that down, and then you want to set up auto pay on all your credit cards. Auto pay on all your credit cards. Okay? Auto pay on all your credit cards. 5 to 7 days before the due date of, 5 to 7 days before the reporting cycle of that specific card. You need to do this if you want an 800 FICO score. If you do not do this, you probably are never going to have an 800 FICO score. So do this right now. Set up all your cards on auto pay with a bank, the bank that you use, and then you'll never ever be late for your credit card bill ever again. If you do that long enough, 3 to 6 months, you're going to get default credit limit increases by default. But you never just want to accept what they give you. Although it is a great indicator that you're doing very well, especially if you apply this, you will get default credit limit increases. Basically, the credit card company will expand your credit limit by a small default. But don't stop there. What you need to do next is call the credit card company and negotiate with the risk assessment department to get a credit limit increase. Try your best to do it without getting a hard pull. The best times to call are after lunch, closer to the end of the month, because these risk assessment departments are essentially underwriters which underwrite credit limits and get incentivized to do so. When they find a good candidate, they make bonuses. So you want to enhance your negotiation power by instilling good credit habits, having a healthy payment schedule, and knowing when to call them on the right time where they're feeling good, they've already ate, and it's at the end of the month, and they want to get that promotion, and you meet all the criteria, so chances are you can get a credit limit increase without getting a hard inquiry. However, if you do get a hard inquiry, that's fine, and we'll go on specific ways to call certain credit card companies and other later on. But this is just the basic formula to understand the whole mechanism. You need to do this, you need to negotiate with the risk assessment department every 3 to 6 to 12 months after mastering this healthy payment schedule. If you are not growing, you are decaying. You want to increase your credit limits continuously. You want your score to go high. Your score is capped out at 850, but your credit limit can always go bigger and bigger and bigger. And the moment you stop doing that, your credit score is going to suffer, because as you accumulate debt, as you age, you want to also increase your available credit limit, because that's weighed against your available credit. And if you want to get a mortgage or auto loan or a business loan, business funding, that's also weighed against it too. When you have auto payment set up, and when you have finally mastered to not borrow more than 35% of your credit limit, that's maximum, right? That means if you max it out, but you don't have enough money to pay it down to 9%, you want to make sure it doesn't report above 35%. But here's the thing, if you do that, that means you haven't managed your finances properly, and you can't afford to do that, especially if you can't do it on time. If you cannot make the payment down to 35%, ideally 9% is better, within 5 to 7 days before the reporting cycle, within those parameters, then you really can't do it. So don't even try. Don't use your credit card randomly. We'll go about using credit cards for specific means, because each credit card also accrues reward points. There's a benefit to using credit cards. Credit cards are better than cash and debit cards because you get rewards points that accrue over time to give you benefits and access to other services that you may need, especially if you're a business owner and traveling. If you want to travel freely and get free upgrades without having to stay at hotels like Marriott, Sheraton, and Hyatt for hundreds of nights and spending money, or even spending money on the flight and flying hundreds of flights just to get a free upgrade, you want to leverage credit cards, because credit cards have partners with airlines, co-branded businesses, and hotel chains. So I'll have a roadmap further later on, and I'll explain precisely how to do that in a little bit. Do not get late payments. Those are the hardest to remove. Even though I removed one recently for my client, and thousands for my clients over the years, they're really hard to remove. I don't mind taking your money and having me remove it, but to save you the money and the stress and your credit, because sometimes it takes a while to get even a 30-day late removed. And I want you to avoid that at all costs. So do not get late payments, because why? You're going to set up auto pay. If you have auto pay set up, you're not going to get a late payment. If you like this video, I'm sure you received a little bit of value. Go ahead and give me a like on this video and shoot a comment. If you have any questions, please drop a comment. If you want to book a consultation with me, the link is in the description below. In the next video, I'm going to go over credit building strategies to take you from beginner all the way to elite. I'm not going to hold anything back. I'm going to tell you exactly when to apply, how to apply, and what cards to apply. That way you'll have 90% approval odds. How would you like that? Do you guys want Chase Sapphire Reserve, Chase Private Client? You need 10 million in assets to get those. Are you a student? Are you a business owner? Do you want business credit? Do you want hundreds of thousands of business credit? Okay, I will drop the blueprint on how to do that in my next video.